on, everyone? Welcome to the Stock Market Morning Prep video for Wednesday, March the 5th. Market surge on Putin comments. Dow Jones up 227 points. Nasdaq up 74. S&P up almost 30, $28.18. And the Russell, which led the way, was up $32.29. So big move on the upside. Markets like the fact that tensions are easing between Russia and Ukraine. So let's buy the market up, and that's exactly what happened. Markets are, at this point, fairly valued. We also have markets at right now extremely elevated. I'm going to show you we're coming into some major extensions. We are at monthly extensions right now, and I'll get that to you out in a moment in the chart segment. But guys, got to be very careful here. As the markets continue to move higher, stocks have been doubling, tripling in the last year, and this looks like there's no sign of stopping, and that's a big concern of mine. Not that I'm not taking the best quality day trades, but I am not putting on any overnight risk here. At any given moment, just like we had on Friday and just what we had on Monday, we opened down 20, 30 handles. Yeah, I think this was a big gift that the markets actually, in fact, rallied 30. At one point, we're up 31 handles in the S&P, which is actually ludicrous. We don't get that usually in a month's time back in the day. But anyway, markets are rallying, so there's really, at the moment, looks like no sign of stopping it. But we have to remain diligent here, and we have to realize that, you know, everybody's feeling really good, and that's the contrarian in me is saying, you know what, I'm going to take a step back here. And I've been very cautious. The markets several months now, and I just feel that, you know, the party can't last much longer. Although we are not shorting the market, right? Because we're trend traders. We trade the trend. You trade the best quality setups in the direction of the trend. Do not short the market. As much as the market is overbought and giving us these warning signs, until price tells us that the markets are indeed making lower lows and lower highs, taking out pivotal lows, that's when you will look to start shorting rallies. Until then, look for the best setups and just manage your trade according to your trading plan, okay? Very important here. All right, let's go right into some of the indicators. I was just curious to see what the McClellan Oscillator, which is a momentum indicator of overbought, oversold reading. And as you can see here, guys, we have plenty of room to run to the upside. We are not overbought based on this reading. This is very reliable. So if you think we're overbought, and remember, an overbought state or even oversold state, we can be that way for quite some time. Okay, that's just telling us that the markets are healthy and markets are strong. So being overbought, we can continue to do so for days and weeks to come. Now remember one thing: we have non-farm payroll numbers come out. It's the first Friday of every month, which is this Friday. And that's going to really tell Janet Yellen of what her next move is going to be. Because as we all know, the Fed has pegged the QE to unemployment. Okay, so let's keep an eye on that for Friday. So if you are holding positions or you're looking to carry a couple of positions going into Friday, I would probably either hedge your bets or be really light going into Friday. Okay, but anyway, McClellan Oscillator here, absolutely telling us that we have some additional move to the upside, which makes sense, and I'll show that to you in a moment. VIX, really nothing to say other than literally just collapse. We had a big move up on Tuesday, big move up on Monday, big move down on Tuesday. Obviously, now we have the Bollinger Band starting to come in again. Let's see what happens. When it builds pressure, it usually goes one way or the other. But remember, the VIX is still quite elevated since for the move that we've had, and that's the reason why is because people are starting to buy some protection. Protection is very cheap when you're buying puts. Volatility is extremely low. Premium is very cheap, so I definitely recommend doing that. Let's take a look at these stocks above the 50-day moving average. At an area now where we are overbought in this indicator, okay, and we have plenty of room to run now back to the downside again. So this is an indicator that's telling us that we have some room to run, right? We do have this lower lows and lower highs, and that's exactly what we're making here. You see that slanted trend line coming in and hitting that area here. So not that we can't pop up a little bit, but again, just be careful here. And also, just real quick, Russell did lead yesterday out of the 5 indices that we followed, but it's coming their seasonal strength, which usually happens between November, the first week of March, which is now, obviously, the Russell ends its seasonal strength. So just that's another heads up that I just want you to know. Now, that's all based on history. Not that it matters, but it's just something to put on in the back burner just to let you guys know. Take a look at some of the bullish percent. Now, here's a bullish percent SPX, not even close to giving us a sell signal, which tells me that we can probably run and hit some of these upside targets here, and then we have to really reevaluate it. Now, what I really like here is the XLF bullish percent. Now, the banks woke up yesterday, and I mentioned a lot of people following the videos. I mentioned in December that I said I have three sectors that I really, really like, and I feel are going to be really home runs. One are going to be the banks and financials. The next is going to be the home builders, and the next is going to be solar. Okay, alternative energy, and I still feel strongly about that. And I feel that if you are a longer-term swing trader, all right, or a swing trader to get a little time, I would be accumulating some of these banks, builders, and of course some of the solar sectors. Okay, not chasing, but we need to put on pullbacks. I would be accumulating. All right, so now let's go into the chart segment here. Now, it's all about the yen, right? Now, the yen actually obviously pulled back a little bit. We're still sitting above all of the moving averages, and we are still in an uptrend, making higher highs and higher lows. So really, there's nothing wrong with this at the moment. Now, if we start to break down really hard here, having a couple days below our moving averages, then, well, yes, then you could say that the sentiment has shifted again, and now we are in buy the dip mode. All right, obviously that's what it looks like, but remember, with the yen still elevated and bonds still holding true. Now, we did get a big pullback in bonds, but to me right now it's only a pullback. Price is going to need to break down a couple more days before we get that sell signal in bonds. Okay, now here's the monthly chart of the ES, and I wanted to show this to you because this is the high to low from the recovery lows of the crash, and we are now exceeding our extensions. Okay, we are exceeding it. Next extension would be the 1618 at 2163. Again, this is on a monthly chart. I'm not saying it's going to get there tomorrow, but if we actually close outside, we have an outside month. Now, we did have an outside month reversal here to the downside. It did not hold up, and we did not get any follow through. Now we have an outside month reversal last month. Okay, now let's see. We are now taking out the previous high, but again, we just started the month, so they still have a lot more to go. But I just want to put this in perspective, show you where we are in the monthly chart. Take a look at the daily. A lot going on here, but I wanted to show you, as you can see, stochastics RSI still way above elevated. Again, in an overbought state here. And as you can see here, I did an extension from the high to the low here. Gave us a 1272 extension at 18, let's call it 1879, 1880. That's going to be the next upside target, and that'll probably be, if we get a little follow through, we'll probably hit that target today. Okay, so again, guys, use caution. And also, what do we have? We have an uptrend line here, which coincides nicely with this extension. So we have a little bit of confluence of resistance here, and that's something I'm going to see if it breaks through and exceeds it. Big gap up, or maybe a forceful push higher, and then rolls. That could be possibly a local top that may be in place. But again, we need to see price start to move lower, taking out some pivotal key areas here and making lower lows and lower highs before we get excited to get short here. Remember, we're in a strong uptrend. Regardless of what the market should be and where it should be, we are in an uptrend. Remember that, okay? Do not fight the trend. Here's the hourly chart. Here's that 1838 area right up in here. Here's the 1820. And as you can see here, we literally just exploded on that Putin comments at 1 o'clock in the morning. And then we just followed through pretty much all day, literally straight up. The markets are deeply overbought. Grossly overbought, actually. And remember, when I see something like that, there's going to be a revision to the mean. We just don't know when. So the best time to do is to be light and take the best setups that you possibly can. Here's the stacking of the spiders, GLD, and of course the TLT. Gold and TLT moved lower as we moved higher, and that's a good sign, right? That is a good sign. That's exactly what you want to see. We are still below this trend line, though. We need to really break back above it to start making new highs here. So again, looking constructive, but I don't like to see how bonds really held in here, and also gold. To me, that's just an additional warning sign. Spiders, big pop up here. As you can see, volume was pretty decent, not bad. That confirms the move yesterday. Big move higher, and now we've made new highs again, and we have plenty of room here to make additional highs before we hit this upper trend line here in the spiders. Transports, nice big move up, and as you can see here, Bollinger Bands had tightening, and again we moved higher. Volumes is much lighter than what I like it to see. But yet again, a move is a move. Price moved outside this consolidation area. Now the next step is we need to see some follow through in the transports, and that would confirm the uptrend. Again, this is our leader here. Okay. Our secondary leader is obviously the Russell, which led yesterday. Look at the volume. Excellent volume. So if you're a bull, this is exactly what you want to see. You want to see the Russell, you want to see the transports lead. They are the two big leaders here. But again, Russell led yesterday, no problem. Back into this big rising wedge here. Okay. However, we are now in it. We closed above it. Big volume confirms here that we did have some accumulation. And now again, we are ready to move higher and take out additional highs here. Okay. But again, very good if you're a bull. Qs lagging a little bit. Apple kind of sluggish. And remember, yesterday I mentioned semis are also a little bit sluggish. So the semiconductor sector, not really exactly what you want to see if everything is humming in one, all in one here. But again, very constructive. Now, Bollinger Bands are tightening here, so look for a bigger move. Remember, when you're looking at the Bollinger Bands and they're tight, it doesn't give you a direction. What it does say is, be careful. Energy's building here. Look for explosive move one way or the other. We're going to be vacating the area. Okay. Now, diamonds. Diamonds did lag, even though it was up 229 points, but we did lag here in the diamonds, and that's going to need some follow-through. And it's okay, though, right? It is a laggard. It's one of the laggards of the five indices, but that's fine. All right, now we have a back test of the 200-day moving average in the GLD, but again, still holding its uptrend line here. I mean, you can still see it. Just take it from here to here. We are still in an uptrend, okay? Plenty of room to run to the downside before we catch this bottom, and that would still be in an uptrend, all right, in the GLD. Okay. OIH, love the sector. Schlumberger, Baker Hughes, Halliburton, my three favorites. But again, guys, we need a pullback here. Okay. You never want to buy highs. You want to buy uptrends on pullbacks. Okay. Here's Schlumberger just to show you. We're just sitting here. Look at the base building here. I love the base, and this is what you want to look for when you are looking for trade ideas, right? Nuggets, I call them. Golden nuggets. Nice big base, making a little bit higher highs, higher lows, and then explosive move to the upside. Now we're hovering above the upper end of this trend line area. Look at the volume profiles. Thin zone up in here. If this really gets going, this thing should exceed its highs and make new highs. All right, it's current highs anyway. XOP, oil and gas, same thing. Valero, one of my favorites in this sector. You can see Valero here. Just doing exactly what it's supposed to be doing, hovering above the 50-day moving average. Now, if it takes below the, if we lose this area, you can see this thin zone here. We could easily come down to this area. So I do like Valero as one of my favorites, but I like it a little bit lower. I like to see a test of the 200 and hold. And remember, guys, if you're patient enough, these setups will work for you. And here's the XLE, another one of my favorites. ExxonMobil is one of the bigger ones here. Schlumberger is also involved in the XLE. You could even just buy the XLE here. We come into some seasonal strength in the XLE the next few months. XLY, XLB, which is material, and of course the XLE, which is energy. These three come into some seasonal strength in the next few months. So look for dips in those ETFs as well. Here's USO. Came back in. Tensions again starting to ease. Obviously, oil would take a dip back. Now, I love oil. I love the oil sector. And again, being the XOP and the XLE and the OIH. But I want to see oil now come back to consolidate above the 200. Everything is bullish here. Above the 20, above the 50, above the 8, above the 200. There's nothing wrong with this chart at all. Again, just a little bit extended. I like to see a little bit of a pullback. Let some of these momentum indicators unwind some of its overbought reading, and then look for the bullish percent energy to start giving us a buy signal. Here's the ITB, home construction. Look at this beautiful, beautiful move. We've been calling this area here back in December. I said, wow, watch this breakout. And sure enough, we broke out, consolidated for pretty much another month of January, and we started having this explosive move, and now we're starting to move higher again. Again, a bit extended. I wouldn't want you guys to look to buy here. Look to buy on pullbacks. XHB, same thing. So everything in that home building, home construction is doing quite well. Now Lennar got downgraded yesterday, but look at what effect did it have? Pretty much very little. That tells me that this sector is getting bid up here. Remember, look at a beautiful base. We back tested that base, we hit it, and now we started to rally. So we're way away from the, as you can see, we're at the 8, but way away from the 20, way away from the 50. Let's see if this thing could really come in again, consolidate, and then explode higher going into the spring season. Pulte Homes a little bit better. As you can see, another consolidation. And this here, maybe back to the 20, I'd look to buy this as well. KBH, another one here that really technically hasn't gone anywhere. And look at this big base building from August. Really hasn't gone anywhere. I like this. I like it back a little bit to the 20 and then an explosive move to the upside. Now, XLF. Again, if you're patient, you will be rewarded. Sure enough, we had Bollinger Bands tighten. We had a big move up. We broke back above the uptrend line from the November 2012 lows. So now this has some plenty of room to run to even make new highs. One of the sectors, one of my favorites, and here's Citibank. If you could see, Citibank here had a good day, but again, above 50 and hold really needs to confirm. Unless you're a bottom picker, which I recommend not to do. Again, for a day, sure, absolutely. But watch the banks, guys. Banks are going to give us some good plays in the coming weeks. JP Morgan, same thing. Now, look at this. Look at Bank of America. I wanted to show you Bank of America and see if this thing can come on here. Look at this chart. This is one of my favorites. And why? Well, look at this. We have a beautiful, beautiful break of bearish symmetry. We have Bollinger Bands tightening. We're above the 200. We're above the 50. We're above the 20, above the 8. And this is now starting to get going. I like Bank of America here. One of my favorites. Better than Citibank at the moment. But Bank of America here has plenty of room to run. Look at the thin zone up above here. This thing could literally really start to take off here. So watch Bank of America in the coming sessions. Goldman Sachs, another one of my favorite. Love Goldman Sachs here. We broke back above the 50. Let's see if it has a little bit of follow through. Even if it were to pull back and held this candle's low, that's what I'm going to be looking for. So my two favorites of the banks, Bank of America and Goldman Sachs. And then, of course, Apple. Okay, guys, let's see what happens here. Very interesting. We are very elevated here. We're overextended. Again, not a sell signal. Let the market tell us when we are ready to get short. Until then, look to buy the best pullbacks in the best quality stocks that you can find into some moving averages, into some support, and then manage it according to your trading plan. All right, guys, have a great day, and we will speak to you tomorrow with another update.